Hello traders, this video is going to talk about the Forex dead zones. Stay tuned. Leave the indicators alone. In Forex trading, not every part of the day is suitable for active trading. Consolidation periods, where price moves within a narrow range, can pose challenges for traders. It's advisable to avoid trading during these times to minimize difficulty and potential losses. These are the dead zones: Asian lunch, 12 a.m. to 2 a.m., London lunch, 5 a.m. to 7 a.m., New York lunch, 12 p.m. to 8 p.m. Now, all these times are in New York Eastern Standard Time. Here, you're looking at gold versus the US dollar. As you can see in the gray highlighted areas, that is our dead zones, or our lunch sessions. So we got the New York lunch, Asian lunch, and London lunch. You can see that the New York lunch is one of the larger dead zones, a lot more hours within that session. And the Asian lunch and London lunch are very small. So these are the periods of time between those kill zones that we classically know to trade, where there's more volume or likelihood of a ideal situation to buy or sell. When it comes to these dead zones, though, you'll see that the market is consolidating, accumulating market sentiment, buy stop orders and sell stop orders are adding up, and the market is moving sideways. This is where traders are going to have a difficult time finding trade setups, because the market is more than likely going to give you a phase of consolidation. Let's take a look at some other examples on other pairs. All right, so we're here still looking at gold. And if you look at all these gray areas, more than likely you're going to see price consolidating, moving sideways. Now, I'm not saying that it's not going to give any type of range expansion or some type of retracement or reversal, but more times than not, you will see the market ranging. You can see how this market sells off on this Monday afternoon, and then it starts to get really tight at the end. You see that? Now, this is just gold. There's many other pairs that we can look at where we see these same ideas. Look at this consolidation again here, really clean there, just moving sideways. Let's take a look at, let's say, UCAD. Let's pull up UCAD. And I want you to see, look at all those gray zones there. Look at that. Consolidation, 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 ranging. Right? Even though it trends up, it trends down, it's still within a range. You see, more times than not, these are the areas where traders are going to try and squeeze more out the market when they should just wait, opt for another time session or a kill zone to trade. This is a dead zone, not a kill zone. That's why I named it dead zone. It's something you don't want to trade. It's dead. The market is a fish out of water. It's just moving sideways. You see this? Look how it's ranging. I would prefer traders to kill in the ones that are highlighted with color, right, that are bright: London, Asia, New York. There's another session, London close. I particularly don't trade or talk about it much, but these are the areas you want to find dynamic setups in. And these dead zones will help you frame ideas to get a short-term turtle soup idea. And we'll go to look into show how these ideas form around these dead zones. So let's just take a look at another pair. Let's bring up something that's really different. See that? Even British pound versus Swiss franc, there's areas of consolidation. Very clear time window where the market is more than likely going to consolidate. I'm not saying the kill zones themselves can't consolidate, because they can as well. But these dead zones between the kill zones oftentimes show a phase of consolidation. Very tight ranges. And that's where we want it to start. All markets start in a consolidation. That is crucial. With these dead zones, we have two scenarios. One scenario is the buy side rate scenario. So price is going to raid the 15-minute swing highs or buy side liquidity pools that form inside that dead zone, and likely revert back down to the sell side liquidity or those 15-minute swing lows that are unbroken. We're stalking, though, that short opportunity above the kill zone's opening price or somewhere near the opening price. We're looking for price to revert back to sell side immediately after it runs buy side. The same can be said vice versa. If we're looking for that buy opportunity, that means it's a sell side rate scenario. Price took out some type of sell side liquidity pool. We're looking for those longs below the kill zone's opening price in a discount, and we're looking for price to revert back to buy side liquidity pool. So let's take a look at some of these examples. Here we're looking at that gold example. So this is one of the dead zones on this day. We have a clear consolidation. Prices accumulating buy stop orders and sell stop orders. This is why it's so difficult for traders to trade during this time of day. I would avoid trading here. I would trade during the kill zone. So this is the dead zone right before Asian session. So this is the New York lunch. And this is going to be 12 p.m. to 8 p.m. New York Eastern Standard Time. Large range of consolidation here. We're going to look for buy side and sell side. Keep it very simple in how we're trying to approach this. So that's buy side because it's a swing high formation. That's sell side because it's a swing low. This as well. I believe we got one more. There we go. We also have the opening price of the kill zone of the Asian session. So that's Asian open. There we go. And we're going to study and see what price does. So let's play it forward. So price has what? A buy side raid scenario right here. It's raiding buy side. Let's mark that off. So buy side's been ran out. And we're going to look to see if price is going to revert back down to these levels of sell side liquidity pool. Now, it doesn't have to hit every single level, but it's just the idea and the framework. Now, there should be some type of short opportunity via 5 minute, 3 minute, 2 minute, or 1 minute. And there's going to be various ways of entries to go short above the Asian Open to see price draw down to the sell side. Let's play it forward to see what happens. And we can see after taking off and taking out that buy side, there's a quick immediate repricing to take out that sell side. Let's play it all the way through. And as you can see, after taking out that sell side, it runs back up and takes out any buy side liquidity pools that it started to make, making higher swing highs and higher swing lows. But ideally, that best sell for that Asian session happened above the opening price, and vice versa. You can see the best buy occurred below the Asian Open. So it's very important to understand where you stand with a premium and discount or overbought and oversold levels when buying and selling. Let's go on to the next dead zone. The next dead zone is going to be from midnight to 2 a.m. Now, this dead zone is going to be our Asian lunch. So Asian lunch, and that's going to be from 2 a.m. to 5 a.m. And we're going to play it forward, and you're going to see more times than not, you're going to get that consolidation. We frame sell side, that sell side right there. You can see it's ran out or rated or purged, no matter how you want to say it, right at 2 a.m. There's another level that's slightly below it, the sell side. And then we have this buy side here. So what happened? We had a sell side raid scenario. Price is taking out sell side liquidity pools, and we're going to assume price is going to draw back to buy side there. That's where we're going to expect. And that should happen below the entry or idea for us to get back to those longs to get to that buy side should happen below the opening price of London session. So this is London open here. If I could spell, there we go, London open. Let's play it forward. See price pulls it all the way down. And at the end of the session, right at 5 a.m. where the kill zone ends, it gets right back up to that buy side liquidity pool. So we could take in the assumption that there was some type of long down here to possibly get you here. Not saying the long that you may have taken would still be feasible because it could get stopped out depending on your parameters, but the context and framework. I'm just trying to give traders a very simple cookie cutters approach to framing these dead zones. Let's move on to the New York session. So the next dead zone that we would have is from 5 a.m. to 7 a.m. And this is going to be our London lunch, which is prior to the New York kill zone. Let's find out and see how that plays out. That's sell side. We'll make that blue. And then we got buy side here. We got a few levels of buy side. We got the opening price. And let's observe. Price purges, raids, breaks, however you would like to say it, sell side. That means there's a possibility price could give an entry idea to go long. Now, your long idea may not be successful. Please understand, I'm not telling you it's going to be 100% guaranteed, but there might be an opportunity to take that risk and manage that risk to the upside. Let's see what happens. Play it forward. You see price quickly reprices again back up to buy side. He even runs back down again to sweep maybe sell side again below other levels. But ultimately, we can see the sequence. Take out sell side, revert back to buy side liquidity pools. This brings me to the end of the video. I hope this video was valuable to you as a trader. If you enjoy this video, then I think you'll like these two as well. Please subscribe, like, or comment for more high quality Forex videos. As always, safe trading, leave the indicators alone, and peace.